Yeah, no, been a big day at work, boys. Bit tired, a bit wrecked, but it was all good. I got the not much room here for this mic, so sometimes it falls off on typing. But so we got a referendum vote last night, a couple of hours after the a poll after the update, and that was basically showing that it was very tight in terms of the UK vote coming out starting on tomorrow in the UK time. Now, the immediate reaction in the pound was to sell around about 100 points. In the end, it got around 150, but um, the exact sort of fear in the market just wasn't there for follow through. All right, now today I don't expect the market to be moving too much. Not just because of the UK Brexit coming up. It's just that I also feel like it's fairly priced. Okay, so the chances are around 80% that they're going to stay, 20% they're going to leave. Um, from this point of view, you're looking, the risk reward really doesn't seem like it's there much to be long going into the announcement for me. I don't think you'll get too many pips out of it on the long side. And also, during the day, you're probably going to see some spiky action. Right, so what will be happening is that exit polls will start to come out probably around about 11 to 12 GMT. Now, these are all non-public exit polls, so you're really going to have to read the market via rumors on Twitter and also the price action on the chart. And so I wouldn't be reading. Yeah. So I mean that's the poll that Armin's just wrote down there. 44% remain, 45% leave, but those undecideds are probably going to vote for remain. That's generally the rule here. So you got a little bit of selling pressure, but not much. Do I expect there to be some sell-offs today? Yeah, easily could be. I don't think we'll go much below 146 though, just as the market tries to take profit and people take risk off the table. I think the short-term money is probably long, and any sort of sensible trader may be looking to sort of book that profit into the announcement. So most of the clients that I've been talking to all day are asking me, how do we play this? What's the effect on other pairs? So I'm going to quickly go through, my base case, which is the stay, the leave case, and when exactly you're going to get that information. I mean, generally they're saying that the final result's going to be out 4 a.m. UK time Thursday, Friday morning. So that's pretty late. I think the most of the market moves are going to be done well before midnight UK time. So I think it's by the end of the US session, it should be all priced in. The base case is that they stay, and that should lead to say 200-300 point gains in the DAX. Aussie dollar on the risk move, say 76.50. All right, so I'm 76.50, so around about 150 points. Expecting the S&P to break or at least test 2120. Okay, this is going to be fresh all-time highs type scenario, and the pound to be heading up towards 150. All right, between 150 and 152. So we're just going to draw this on today just to see how we play out tomorrow. Now, a lot of them are asking, well, I don't want to really play pound because it's going to be those large whips, and stops are going to be hit, and if I don't use a stop and it turns into a rout, you're really going to be putting account in trouble. So there's a few trades I've been suggesting over the last little over the day today to the clients, and most of them structure around taking advantage of what should happen if stocks rally and the pound rallies sharply. The main one being that dollar yen should break 105. Now, I've set this up as a trade already. should break 105. Depending on how much US dollar selling comes through on the euro, all right. So depending on how the euro moves is going to be very important to how the dollar yen goes, because the dollar yen and the euro have this close relationship based upon the US dollar strength, and it's really going to see, if there's enough momentum in the stock market, enough relief that the yen crosses start to rally, dollar yen starts to rally, and really how punchy the euro is. If the euro is really punchy, then the dollar yen's not going to move that much because there's just to be too much US dollar selling. If the euro though can not get above 114, right, and fails, just fails at 114 or just stalls up there, and the main reason that may happen is because euro pound is going to be heavily sold, and euro pound is a big source of euro strength or weakness. If euro pound selling overflows the euro USD buying, right, then the way that the market's going to squeeze through here with the risk on attitude is going to be through the dollar yen popping higher. All right, so euro yen will go higher via the dollar yen rather than the euro, if that makes sense. That's in the case where the euro can't break 114. All right, and that's where the euro pound's just getting smashed low, below 75 towards 74. All right, so that's really what you have to be watching there. How the euro reacts depends on whether you can play dollar yen long, and whether you're playing dollar yen long really relies upon then if you're going to play straight Aussie. All right, straight Aussie long, because that's still got so much room to move here after we get past this Brexit problem, and the US dollar's on the back foot, and we've got that correction of playing catch up, or we play Aussie yen. All right, both of those have tremendous amounts of room to move here. Aussie yen probably targeting 83 at least, and I like Aussie yen. I do think it's going to go the dollar yen above 105 euro stalling way. Most banks suggest that the euro is going to pop high towards 115. I don't think that's going to happen. I think that it will struggle. Oh, we'll see though. We'll see. All right, so I'll be keeping an eye on those two pairs as the market unfolds. You may get indications of which way the market's going to go early on, as it looks like the exit polls are going one way or the other. All right, so Aussie and Aussie yen. Now, if those are still too dramatically, too risky, because if it's a leave, Aussie probably breaks 73 easily, and Aussie yen will probably go back towards 75. So there is still some downside risk, not dramatic like the pound, but still some downside risk. If that's still too risky for you, then the other pair that I'm looking at is a Euro Swiss. All right, now the Euro Swiss has got some peculiar characteristics that make it pretty ideal for this scenario. The Swiss National Bank has said that they will intervene to stabilize the market if there is Hands, what are you saying? Is that good or bad? I'll kill you. Yeah, so the Euro Swiss has got some peculiar characteristics that the Swiss National Bank will be buying Euro Swiss to stabilize Pound Swiss and to stabilize the safe havens. All right, and so this one has got protection on the downside. All right, so if in the case of a leave vote, I'm talking about. In the case of a leave vote, this has got protection on the downside because as the Pound Swiss is crashing, you will see them come through and stabilize on the Euro Swiss. And you saw this before in other events. All right, and if that comes through, then you may not even get the Euro Swiss below 1.7. All right, and that's really good risk reward here because going back towards 110, I think it's going to be a default case here if we do get the Remain vote in winning this tomorrow. So this is after racking my brain, this is about as asymmetric as you can get. Downside limited. Top side, fairly significant. Yeah, I mean, I don't even think it's going to get much below 107.80 if it's a leave vote. More importantly than that, you're going to have a lot of time to get out of the trade, if that makes sense. And that's just this will go up if it's risk on, but it won't fall too much. I mean, it's not going to be dramatic, but it's pretty a pretty solid trade in my opinion. All right, so that's the overview of how to play it. Now, when it comes to what my game plan is with the pound, how am I going to play the pound? Well, I've been pretty close with Euro pound for a while now. Now, Euro pound has had a big double bottom down here at 70 last year, and it was a trade of 2015. It was a trade of 2015 for those who got it. All right, it was very easy to sell, and it just kept on giving, and the retracements were very light. Yeah, on this way down. So this rally, as the Brexit risk loomed, yada yada yada, that was pretty significant. But the space for the downside and the subsequent movement going forward should also remain quite steady in terms of how we get to 70 from here and below. Because the euro itself, in any scenario where the US dollar is going to be weak, the pound's going to do a lot better than the euro because of the ECB jawboning, quantitative easing, yada yada yada. And so it should be a gradual decline down, and I don't think we're going to get much below 70, 74, 73, definitely not 73 tomorrow. Okay, so say the market rallies, falls to below 75 and stabilizes around 74 tomorrow as we go into it, or even gets to 73.50 and starts bouncing around. We're looking to sell every rally on this particular pair going forward in a stay vote. And what this does is it takes away the US dollar component of the trading, all right, which could be flippy and hard to read, going with the NFP coming up the week after. And it's a nice smooth way without too much risk, in my opinion. So we're selling 74 with a stop at 76, targeting 70, 68. Obviously we'll be in and out, but that will be the base case of the trade for the next couple of months. So that's going to be happening on Friday. We'll be talking about that trade as it develops on Friday night in the chat room. All right, let me just check the room. Aussie 75 has been broken a few times. I don't think 75 is much on the radar. I think it's breaking 75 right now. So don't even worry about 75 as being an issue. Yeah, if you're talking about that, percentage moves 2%, Armin. All right, so that's how I'm gonna play it. Downside, I suppose I should talk about downside. Yeah, downside, just get out and don't try and pick the bottom in a leave vote. It could get ridiculous. All right, because no one's now positioned for it. The way options work and the way that the market's been protecting itself with options is as an option gets further into the money. Okay, as an option gets further into the money, so if I've bought some puts because I'm scared about the UK leaving, the person I bought the option off, right, the bank that I bought the option off, all right, they have to continue to sell as the option falls further. They have to continue to sell at spot to cover their position, to hedge their position, because at the beginning of a trade or an option trade, there's something called what we call the delta is only around about 0.5. As the market moves further into the money, they have to continue to keep on selling that trade to continue to be fully hedged with the customers. And we're not talking about $1 million deals. We're talking about tens of millions, hundreds of millions types of hedging situations. Right now, that sort of scenario where no one wants to be buying, the market gets what we call slippery. And it could be air pockets between orders. And also a lot of now banks, which are signed up to always provide liquidity, will have circuit breakers where they pull their orders. Right now, if they pull their orders, it could be like S&B, not S&B where it goes from 120 down to 1, There was a little bit time after that where it was just mayhem for like 15 minutes and no one knew where the market was. All right, it went down to 60 on 65 on some brokers because no one would give an order. All right, that's what could happen tomorrow. I'm not saying it's going to happen, but it would be a big surprise. And the way the market's rallied into the announcement means it's even a bigger risk. The downside that we're getting slippery straight below 140. 135 will be the target for Friday in my world. But anything could happen and it could get ridiculous. Okay, in that scenario, you don't want to be trying to pick the bottoms. A, you have leverage issues. B, if you don't use a stop, you could get margin called on any Sigma 5 event, like it goes below 130. You just don't know what it can do. So yeah, just don't try it. We may try it next week, but let's just not be full maniacs, right? So yeah, the leave vote would really stun the world, and how long and how big the reaction is in the markets. The short-term reaction is going to be hard to tell. I don't think it'll be the end of the world. After a couple of weeks, it'd probably be a really good buy on the dip, but yeah, just you don't want to play that game. All right. I mean, that's if you are serious about making money long term. This is actually a road hazard to your trading account. What's going on right now? This is not normal trading. This is not trading as usual. All right, so that's enough rant from me. I have taken those 3 positions. A little bit Euro Yen as well, just because I don't know why. I was surprised it fell back down yesterday, and I was just reloaded. Same trade that we had in the chat room. Yeah, so that's sort of like the signal account. These little trades. Signal account, which doesn't exist yet. The secret signal account coming. But let us bring up a little bit of something different for today. This is FXWW chat room. You can subscribe to this chat room if you'd like. Around about $100 a month. It does provide you a lot of bank research. All these guys are bank traders and hedge fund traders. In this room, they have another room as well. So let's just go over a couple of the cheat sheets that the banks put out. The banks put these out just by the analysts because they got to, right? And that's everyone's only talking about this type of thing. This one I actually haven't read. This looks like it's really in depth, going at the local. I don't even know what you call them in the UK. Shires, councils. We call them councils over here. Districts, maybe. Potter would know. Possibly will. You don't know. You damn hobbits. Counties. All right. All right. I don't even know these names. Right? They don't. But these are the top safe, the top safe and the top leave. So it looks like the top leave South Staffordshire. And Boston and Kings Lynn and Mansfield. What have we got there? Some large UK IP, large UKIP populations, huh? It's like a, it's like a scene out of Game of Thrones over here. the Tower Hamlets, Hammersmith, Wandsworth. Alright, so yeah, obviously it's for the locals because it's a little bit too specific. This is Nomura's cheat sheet. These guys are saying 4 to 5 a.m. as well. I've been saying to clients that the exit poll guys will probably push the market around way earlier than that. I mean, the ultimate outcome 4 to 5, but yeah, no, the exit poll's right. Most of you guys would have voted by 6 p.m. UK time, so surely the exit polls would be fairly accurate by then. And the good thing about the market is, right, they can't hide their positions. If they start punching the market one way, we're all going to know that something's up. And everyone's going to hop on. That's where the wildness comes from. Yeah, move will be done. Yeah, I mean, it's... People get spooked, right? The first big move, everyone will hop on. And it was only last week that the Leave were in control, so... And really, the bookies these days aren't really bookies, right? They're actually a marketplace. You know, it's not like they're setting the odds. The market's setting the odds, and it's the big money that's betting on Remain. It's the small punters in massive numbers who are betting on the Leave. Can we get to the real situation here? Some of these reports are really wordy. But basically we want to get to the situation where they're saying where they think the market will go. Yeah, so this is interesting. This is saying where the timing of the trade. So fairly, you know, by midnight it's going to be fairly clear, it looks like, on that. Alright, FX trading on the night. Yeah, this is very interesting, guys. Very important to read that little rant there. This could present us with a very tough and uncertain trading environment during the public exit polling blackout periods, when polls are open between 7 a.m. and 10 p.m. London time. Any extreme price action during that time may be regarded by market participants as a reflection of the trading on the back of private exit polling. This could further exacerbate the price action, but is something on which we would advise caution. So straight at 10 p.m. your time, Potter, you're going to have the... Looks like you're going to have a first U-poll, YouGov exit poll. Well, that's just disappointing. I was looking for the actual numbers. Let's go find those numbers. They've been in a lot of reports. 135 and 150, 52 were touted around. I'll come back and read that one later. That's interesting stuff. Alright, what's the UBS got for us, boys? UBS suggests percentage moves in the mid-teens for UK and EU equities. That's bigger than I thought. That's like 1,000 pips on the DAX. That's nothing. That's nothing to be sneezed at. Yeah, these guys are on the same page as me though. If we remain, we think the S&P 500 could reach new highs. In relation to gold, I mean, many traders trade gold, many of my clients trade gold. So there is going to be some downside, right? But remember that the gold was at 1250 from the NFP week results anyway, a couple of weeks ago. Alright, so gold may not fall that much. It's going to be sold off, but just by how much is, 1250, below 1250 is probably a little dangerous on the first day. Alright, so they're suggesting 73 to 75. Pretty similar to what we were talking about earlier on the euro pound. That's the one we're going to be looking to sell. Top side, they're looking for 12 to 17%. Up towards 86 to 90. 90 was where it was at in the middle of the global financial crisis. That would be extremely damaging. So gold, they're suggesting, goes to 1365 to 1475 on a leave vote. Well, everyone knows numbers anyway on pound, right? Pound quickly is going to take out the lows between 138. That was the low earlier in May and April. Surprisingly, they're not going into straight pound too much. It's a fairly useless report, isn't it, from City? I'll leave that up for a little bit, guys. For those of you wanting some little bit of technical information, so actually what we got going on right now is the state of origin. It's similar to like a similar. Oh, Jesus, we want to see all that, don't we? So yeah, it's similar to say Super Bowl in terms of hype. It's pretty ridiculous actually. So it's the two biggest states here who play rugby league. They all form their best team, and they play best of 3 each year. That's probably where Nick is. The theory behind the euro is that it should go up, right? But there is ways in which it won't go up. And you don't expect too much movement in the next little bit, guys. You just there's no reason for the big rally pre-game, and it's fairly evenly priced here. You got the US dollar weakness on one side, you got the euro weakness on the other side. They're both pretty weak. I mean, the next big move in the euro is probably going to come from the Fed being more dovish than they currently are, if that's possible. Or economic data and inflation picking up in the eurozone. Full on downside again below 110. I don't see the way it happens just yet. I mean, obviously it can happen. I just don't see how it happens. And if euro's going lower, right? Where the hell do you think euro yen's going? What, back to 100? That's harder to see. So as long as the sovereign debt crisis doesn't come back in any form, I mean, who knows what the next move is going to be? It could be a China problem. China problems would help the US dollar for sure. Safe haven buying. But yeah, right now we're just going to get past the Brexit, get past the next NFP. If the data continues to weaken in the US, and it's just easy to see the whole market swarming against the US dollar. So yeah, Euro Swiss is the confirmed way. I mean, the best way I think to play safely tomorrow long. You won't get big payout, but you will get a payout, and you'll have enough time on the downside to get out and leave. Euro yen, dollar yen's just speculative on risk on attitude. I'm probably not going to touch the pound. Unless we want to sell a little bit just for fun. Let's just sell a little bit just for fun. Can't be a streamer without some sort of little bit of fun. It's not a big account anyway. So you want to join that Thomson Reuters room, you have to go to FXWW. My mate Sean Lee runs that. He's an ex-Deutsche Bank trader out of Sydney. He used to write nice reports for Forex Live, if you remember Forex Live. Ed Sean Lee, he was one of the big contributors there. Alright, he's updated his site. So yeah, we're looking at $50 a month. That'll also give you no, it doesn't. That should give you Reuters in the chat rooms, but you can download all the data and stuff. And the Ultimate FX Trader Pack, I do believe, has access to Reuters proper. So this FX Connect is a Thomson Reuters package for retail traders. That will give you the data that's very hard to find, like the yield data, right, on bonds, and that shows you what the pricing in of rate hikes is after data from like Australia. Say unemployment numbers come out and you want to see what the effect is on the rate forecast, you can see that through this program. At my work, we got the full Reuters, which is significantly better, but this should do a good enough job for you as a retail trader. But the full Reuters is something like $1,000 a month, so and that's $130 a month. I'm a dealer at Easy Markets. Been there I had 2 years off in Asia. I lived in Thailand and Gold Coast, but I worked there for about 8 years. They're one of the first brokers, but their spreads are pretty high. So they rely on service model, and service model hasn't really worked as well as, say, it does in stock markets, where you can give a bit more advice that's actionable, if you know what I mean. A bit more insider information in the stockbrokers world. Whereas, as a dealer, right? I mean, geez, it's hard enough to make money on my own account, let alone helping the rich guys make money on theirs. No. Yeah. Yeah, I don't know. That's all my ladies in there, Potter. Yeah, so the main stuff I do is actually like options trades as well, because they're an options broker. So every now and again I might show you some options, because options are an important part of a trader's toolkit, right? And you need to have. I mean, there's certain situations where the only trade you can make money from the way you see the market is to use an option. I better check what's in it before I look at it, Potter. Let me have a look on the other screen, mate. It's just bullshit stuff, mate. It's just bullshit stuff. Like stuff for the house. Yeah. Little side table. You expecting a lot, weren't you? All right, boys. Well, I'm gonna go down to the pub and have a couple of beers. Watch the game. Get a steak. I will be. I'll be back tomorrow. We're gonna have, obviously a bit more of a preview tomorrow about the pound and what's going on. Might try to develop a few trading strategies around, say the market spikes one way or the other, which way we're gonna go. What sort of whip would be safe. I mean, below 140 is not safe, but above 140, say 145, right, maybe worth a little dig just if it's a rumor. But other than that, everyone have a good night and trade safe, yeah?